Hello and welcome to my channel. In this video, we would be learning about the SOX Act, which basically stands for the Sarbanes-Oxley Act. Now, this video is a part of Business Ethics and Corporate Governance module. In this playlist, I have already uploaded many other videos, so I request you to watch all other videos in this particular module so that you get a better understanding. You can find the playlist link in the description box. And for this one, we would be discussing about the meaning, criticism, and key provisions which I have mentioned over here. So without wasting much time, let's start with the video, and do not forget to subscribe to the channel and do hit the like button if you like this video. So let's start. Okay, so starting with the meaning of Sarbanes-Oxley Act, this was enforced in 2002 by Securities and Exchange Commission. Now let me explain in detail about Securities and Exchange Commission. This was created by US Congress, which works with the motive to protect investors, maintain a fair and efficient capital market, and facilitate capital formation. So that was the basic motive of SEC, which we talk about. And Sarbanes-Oxley Act was enforced by SEC in the year 2002. Now that was mainly for the purpose to mandate strict reforms. So strict reforms were required and to impose criminal penalties. Now this was at the time when there was very high profile, highly reputed companies were doing major scams and frauds which were shaking the belief of the investors in those companies. So there was a lot of fear and the investors were not able to invest their money in capital market because of those frauds and scams happening, and that was the basic motive why the reform was required, and thus SOX Act was a creative initiative to resolve all the issues related. Now, as I have mentioned over here, it was to establish improved auditing, financial regulations, better business practices at the publicly traded companies. So this was majorly focused upon listed companies in the stock market where people invest their money and these companies raise those money and then use it for the business expansion. So this was basically concerned with the promoting the interest of shareholders, if we say that in simple language. Now this was named after Senator Paul Sarbanes and Representative Michael Oxley in US government. If you don't know what does a senator means, it is a person who works in US government. So both were related to US government, and this act, because it was formed by them, it was initiated by them, it was named after them only. Now this act was enforced to protect shareholders, employees and public from fraudulent financial practices and errors in accounting audits. So the main areas we will be looking after in the next slide, that what was the major focus areas. But yeah, in this whole act, new rules for accountants, new rules for auditors and the corporate officers were created. So corporate officers, they were made more responsible, more accountable for whatever happens in their business. It also became a mandate to disclose to the public what is the financial and the operational position of the business, and to keep external auditors to review the statements and the business position of the company. So all these rules were created and it was implemented to make the reforms more strict. Even if it was costlier than previous practices, it was required to maintain the efficiency in the market and to keep up the trust of investors who were investing their money in these publicly listed companies. So the act was spurred by major accounting scandals, as I already mentioned that at that time in the year 2002 there were major accounting scandals happening, and that too with highly reputed high profile companies like Enron and WorldCom. So that shook investors' confidence in capital market, and thus it became a requirement to mandate this Sarbanes-Oxley Act, which came with a lot of reforms, also criminal penalties for doing frauds and scams, and thus it was totally focused upon better business practices and better trading practices in capital market. CEOs, auditors, corporate officers, accountants, as I already mentioned, were all made responsible and more accountable within new set of rules. So when we will be discussing about different sections which are the key provisions of SOX Act, we will come to know how it was different and what all reforms were included. So let's move on to major focus areas. So you need to remember this. These were the major focus areas in SOX Act. So first is new audit rules were implemented in which external auditors were also included. Enhanced corporate responsibility. So we read how corporate officers, the auditors, the accountants, and the management professionals all were made accountable and responsible for business position and whatever if any fraud or scams happen within the business. Protection to shareholders was again the main objective because they are making investment in the capital market. It's their money which is being used by the businesses. So the protection given to shareholders and not the market and to control the market from being manipulated by any fraud or scam. So that was again a mandate in this SOX Act. Criminal punishment was also included because that would create a sense of fear so that anyone won't repeat any negligence in terms of rules and regulations. So these were the major focus areas by which the SOX Act came into existence. Now let's talk about the section 302, which is SOX key provision. So section 302 talks about corporate responsibility for financial reports. Now here financial reports were introduced and this became important to provide quarterly and annual reports, even the monthly reports. But the annual reports was main in focus because this was published by public companies which described their financial and operational position in simpler language through graphics, photos, and narratives. So right now also if you search about any publicly listed companies, you can get their annual report in which you can find different components like general information of company, letter to shareholders, management analysis, financial statements in terms of income statement, balance sheet, auditor's report, etc. And all these are written in simple plain English so that it can be easily understandable by the investors, by the government, by anyone who is having some kind of interest in the company. So I'm talking about the stakeholders. So this was again mandatory to publish these financial reports, which gives an overview, a total idea about the management position, the financial position, the general position of the company, the business performance over the years, and the future perspective. So this was again to maintain that transparency so that if investors are making investment in any publicly traded company, they are well aware about the company's performance. Again, CEO and CFO were made directly responsible for maintaining the accuracy. So there should not be any negligence or any negligence by these officers. So it was required that they maintain the accuracy, proper documentation, they review and then finally submit those financial reports. So filing of periodic reports, which I talked about, it could be monthly, quarterly, as well as annual report, and the financial disclosures were made mandatory. So this was under section 302, which talks about corporate responsibility for financial reports. Now next is section 404. Again, this one is also one of the key provisions introduced in SOX Act. It deals with management assessment of internal control. Okay, so internal control is like management should assure the organization's efficiency, reliable financial reporting, along with compliance with rules, regulations, all the legal procedures. So this was that management should assess their internal controls in all these areas. They should be responsible for the whole structure. And if any violation is found by SEC, that is Securities and Exchange Commission, the management becomes directly responsible and actions can be taken accordingly. So as we read that criminal penalties were also introduced, so there are several kind of penalties which was included in SOX Act. So if the accountability and the responsibility the management does not understand and any negligence is found, SEC is totally open to take actions. So this was also introduced under section 404, and thus this was all about management assessment of their internal controls. Now next one is section 409, which talks about real-time issuer disclosures. Now this also becomes important because many a times what happens if there is any drastic change in financial or operational position of the business and that is not disclosed to the public or that is not disclosed publicly, so it create a little bit of it does not become transparent because people are not aware about what company is going through if there is any drastic change, and thus it is like kind of negligence by the part of management. So this was required that the company should disclose to the public on real time basis. Now this is what you should note. It was required to be disclosed publicly in an urgent basis, in a real time basis, any drastic change which can be acquisition, which can be divestment, it could be any major personnel departure. These are some of the examples. So that should be mentioned, that should be disclosed, and that too in simpler English language. Now come to section 802, which is about criminal penalties for altering documents. So we talked about how this act also introduced criminal penalties, which was required to create a sense of fear and so that any kind of manipulation, falsification, any kind of fraud or scam does not take place. So this section imposes penalties and imprisonment of up to 20 years for altering, destroying, concealing, or anything that is manipulating with the documents. Now it also imposes penalties of up to 10 years on any accountant, auditor, or anyone if that willfully violates the requirement and maintenance of all audit or review papers. So whatever the papers, whatever the documents are being presented publicly, whatever the documents are being held with the company, that should be audited well, that should be maintained well. If there is any willful violation, if that is by mistake, it can be corrected. But if that is any willful violation, action could be taken by SEC, and thus it makes management responsible for all these kind of penalties. Now let's come to section 806. Again, this is one of the key provisions of SOX Act. It encourages the disclosure of corporate fraud by protecting employees of publicly traded companies or their subsidiaries who report illegal activities. So many a time what happens that inside the company illegal activities are going on and employees are not able to report because they are having fear that there could be dismissal, there could be discrimination being faced by them by the seniors. So they do not report usually about all these illegal activities. Now this section makes it more easier for whistleblower. Whistleblower in simpler terms is any person in the company who opens up complaints or report about any concealed misconduct, any illegal activity happening, something unethical going on inside the organization. So it could be employee, it could be anyone related to the organization who are also known as internal whistleblowers. So if those persons come up, it's more likely that the seniors, the management would try to cover them up, would try to fear them up, and thus there are many problems like they face of dismissal, which I mentioned, if they are reporting any fraud of the company, any illegal activity happening in the company. So this section tries to encourage the disclosure. They try to protect those kind of employees who publicly report about any illegal activities happening in any listed company, any public company. Now, laws are enacted to protect these whistleblowers from retaliation by the concerned parties. Those are generally in power. So, as I already mentioned, this was again a requirement and a key provision which was included in section 806, that was to protect those persons who try to disclose any internal, illegal, unethical operation happening inside the organization. And thus it also becomes important because these smaller activities, these smaller misconduct at initial level, they become a bigger fraud, a bigger scam which disturbs the whole market, and thus it leads to the stock market crash where people loses a lot of their hard earned money. So all these things was kept in mind, and these key provisions were included in SOX Act, which was introduced by Securities and Exchange Commission. So this becomes very important to regulate the capital market in a good manner and to protect the investors' interest, and also to make the management more responsible, as well as to create penalties and punishment in case of any criminal, any illegal, any unethical activities. Now let's talk about the criticism faced by SOX Act. Again, this was a very good step, very good initiative taken by the US government, but every time there is criticism if something new is introduced. So right at the time when it was introduced in the year 2002, it was implemented. There was criticism like the law would hinder competition and business growth because it was having a lengthy procedure, it was costly, it was time taking. So everyone, those who were doing fair business, they complained that because of some companies like Enron and WorldCom who has not followed legal procedures, who have done frauds and scam, why everyone has to deal with these overly burdensome, but overly burdensome regulations to be followed. These were the mistakes of few companies, and others are doing well in their business. So why this kind of extra regulations being laid out to them for no reason? So this was again a criticism by them. However, if something is being implemented, everyone should follow to make and it could not be that few companies who are doing such scams should go through these regulations, because you never know if a company is good at this time. At the later stage, you may found that the company was involved in any kind of illegal or unethical activities. So that was again not a right criticism, but again people were talking about it. And yeah, it was costly, time taking, lengthy procedure, but soon it was regulated, it was required, and people get habitual, the corporates get habitual of all these. The auditors were kept, the accountants were involved, more management became more responsible. So all those were necessary. It did not hindered any competition or business growth. So again, these criticism failed, and it was successfully implemented, and this was all about SOX Act. So thank you for watching. I hope you like this video, and please watch other videos in this playlist. Subscribe to the channel. Thank you.
The Gramm-Leach-Bliley Act, GLBA. In this lesson, we're going to talk about the origins of Gramm-Leach-Bliley, the kind of information that's regulated by Gramm-Leach-Bliley, and the implications of Gramm-Leach-Bliley in the cloud. The Gramm-Leach-Bliley Act was passed in 1999. It's also called the Financial Services Modernization Act. The reason the act was passed was that it enabled banks to banks were able to purchase insurance companies. There had been a separation between banks and insurance and other types of financial institutions in the past, and that was going away. So there were concerns raised about how these new combined institutions would appropriately protect customers' data and financial information. Gramm-Leach-Bliley emerged to answer that question with the sort of deregulation of this barrier between banks and insurance companies. It is administered and enforced through the Federal Deposit Insurance Corporation, FDIC, and it allows, as I said, banks and insurance companies to merge, which they argued was enabled them to provide better services to customers. When it comes to the cloud, many of the provisions in Gramm-Leach-Bliley focus on improving customer data protections and privacy through a number of different requirements. First and foremost is ensuring that customers' data is protected and that the confidentiality of that data is maintained. It really is forward-looking in terms of making sure that people's privacy, especially regarding their financial information, was protected. It also had many information security-related requirements, such as having someone called the Information Security Officer as a designated point of contact within the organization, and then also having plans with regards to information security and incident response. in many ways, that was very progressive for the time. 1999, we're kind of like in some of the earlier days. And this designation of an individual in the role of information security officer, it looks very similar to the data protection officer that we'll see in the GDPR legislation that came out of the European Union to protect EU citizens' data. All right, quiz question. All the following are covered by Graham-Leach-Bliley except banks, mortgage brokers, or credit card processors. If you said credit card processors, you're correct. Banks and other financial institutions such as mortgage brokers, payday lenders, anywhere you really are having financial information about your, basically financial information is registered with this entity or used when making decisions from this entity, they are regulated under Graham-Leach-Bliley. Credit card processing, as we'll see later, isn't actually regulated by a law, but by a standard called PCI, the Payment Card Industry Standard. So in summary, we talked about the origins and importance of Graham-Leach-Bliley to regulate banks with the removal of this barrier between banks and insurance companies, and the implications of Graham-Leach-Bliley in cloud environments, namely that you have to be aware if you are storing or processing individuals' financial information or financial data, and ensure that it's both protected, and realize that this means that you are required to meet the requirements in the Graham-Leach-Bliley Act. All right, let's move along, and I'll see you in the next lesson.
हेलो फ्रेंड्स, वेलकम बैक टू अ न्यू चैप्टर टुडे। मैं आपका दोस्त संतोष पंत आप लोगों को मेडिकल बिलिंग और कोडिंग सिखा रहा हूँ यूट्यूब के माध्यम से। और आज हम अपने एक और इम्पॉर्टेंट चैप्टर पर आ गए हैं जो कि चैप्टर 27 है हिपा रूल्स के ऊपर, HIPAA हिपा। ओके, यह भी एक बहुत ही इम्पॉर्टेंट चैप्टर है क्योंकि यह यूजुअली एक क्वेश्चन भी कह सकते हैं आपसे जो यूजुअली इंटरव्यू में पूछा जाता है। जब मैंने पहली बार अपना इंटरव्यू दिया था तो मुझे भी हिपा के बारे में पूछा गया था, तो फर्स्ट टाइम मुझे भी नहीं पता था बिकॉज मैं इस हेल्थ केयर प्रोसेस में नया था। बट देन मैंने जब अदर इंटरव्यूज़ दिए, कुछ एक्सपीरियंस गेन करने के बाद, तो मैंने इसके बारे में जाना और मैंने हमेशा ये इस क्वेश्चन का आंसर दिया और सही आंसर दिया, जैसे कि मैंने इसके बारे में जान पाया। और ये आज भी अगर आप कोई हमारे जो फ्रेशर दोस्त हैं जो मेडिकल बिलिंग में आना चाहते हैं, अगर वो कहीं पे इंटरव्यू देने जाते हैं तो ये एक क्वेश्चन ज़रूर आएगा आपके इंटरव्यू में, आ सकता है, बहुत अच्छे चांसेस हैं आने के, क्योंकि ये बहुत ही कॉमनली यूज़ होता है हमारे हेल्थ केयर में ये टर्म, हिपा की टर्म जो होती है। तो आज मैं आपको इसके बारे में ओवरव्यू बताऊंगा। ओवरव्यू की हिपा क्या होता है, हम इसके डिटेल में नहीं जाएंगे। डिटेल के लिए मैं आपको एक डिस्क्रिप्शन में एक लिंक दे दूंगा जहाँ पर डिटेल में आप इस लॉ के बारे में आप पढ़ सकते हैं और अपनी नॉलेज को बढ़ा सकते हैं। अभी मैं आपको इस वीडियो में एक ऑब्जर्वेशन दे देता हूँ कि हिपा क्या होता है यूएस हेल्थ केयर में। तो चलिए दोस्तों, स्टार्ट करते हैं। अगर आप नए आए हैं चैनल पे तो सब्सक्राइब कर लीजिएगा और लाइक कीजिएगा अगर आपको कुछ फ़ायदा मिल रहा है इन वीडियो से। ओके, व्हाट इज़ हिपा? पहले इसका डेफिनेशन जान लेते हैं और इसका फुल फॉर्म जान लेते हैं। फुल फॉर्म जानना बहुत इंपॉर्टेंट है हमारे लिए। इस प्रोसेस में हम काम करेंगे तो हमें काफ़ी सारी ऐसी टर्म आएंगी जो शॉर्ट अब्रीविएशंस होंगे, हमें उन्हें फुल फॉर्म पता होना चाहिए, क्योंकि इंटरव्यू में यही चीज़ें जज की जाती है कि आपने सीधा केवल आपने रट्टा मारा है या आप उनकी चीज़ों के बारे में डीप में जानते हैं। इसलिए आपको फुल फॉर्म ज़रूर पता होनी चाहिए। HIPAA इज़ द हेल्थ इंश्योरेंस पोर्टेबिलिटी एंड अकाउंटेबिलिटी एक्ट ऑफ 1996। तो जो हिपा जो लिया गया है टर्म्स, वो यहाँ से लिया गया है हेल्थ इंश्योरेंस पोर्टेबिलिटी एंड अकाउंटेबिलिटी एक्ट ऑफ 1996। 1996 इसलिए क्योंकि ये जो लॉ था ये यूएस असेंबली में 1996 में पास हुआ था और ये लॉ बना था। दैट मीन्स को 1996 का हिपा लॉ भी कहते हैं। ओके, द हिपा एक्ट ऑफ 1996 इज अ फेडरल लॉ दैट रिक्वायर्ड द क्रिएशन ऑन नेशनल स्टैंडर्ड्स to protect sensitive patient health information, which is PHI, from being disclosed without the patient's consent or knowledge. जो ये 1996 में एक लॉ बना था, इसमें एक कमेटी है गवर्नमेंट की, फेडरल लॉ जिसे कहते हैं, फेडरल यूएस में गवर्नमेंट को फेडरल कहा जाता है। फेडरल लॉ की एक कमेटी थी जिसे पेशेंट हेल्थ इंफॉर्मेशन को सिक्योर करने की रिस्पॉन्सिबिलिटी दी गई थी। उनकी ये रिस्पॉन्सिबिलिटी थी कि वो ऐसे स्टैंडर्ड्स बनाए यूएस में जिससे पेशेंट की जो इन्फॉर्मेशन है वह किसी और के साथ शेयर ना हो विदाउट पेशेंट की कंसेंट के। किसी भी और व्यक्ति को पेशेंट की इन्फॉर्मेशन शेयर नहीं होनी चाहिए। तो ये जो हमारा एक्ट है हिपा 1996 में, ये प्रोटेक्ट करता है पेशेंट की हेल्थ सेंसिटिव हेल्थ इंफॉर्मेशन को किसी भी अननोन आदमियों के साथ या लोगों के साथ शेयर होने से बचाता है। क्योंकि पेशेंट की जो हेल्थ केयर इन्फॉर्मेशन हो सकती है वो काफ़ी कॉन्फिडेंशियल हो सकती है, उसके लाइफ में इम्पैक्ट हो सकता है उस चीज़ का अगर वो अननेसेसरी लोगों के पास चल जाए, या पेशेंट की एक तरह का एक प्राइवेसी का राइट भी है कि वो अपनी इन्फॉर्मेशन किसी के साथ शेयर ना करे। तो ये जो लॉ है ये बाउंड करता है उन सभी लोगों को जो भी पेशेंट की हेल्थ इन्फॉर्मेशन को एक्सेस करते हैं कि वह पेशेंट की इन्फॉर्मेशन के बिना किसी भी और व्यक्ति से यह इन्फॉर्मेशन शेयर ना करें। और एज ए बिलिंग कंपनी, हम बिलिंग कंपनी में जो हम काम करते हैं, हम रेगुलर बेसिस पे मेडिकल रिकॉर्ड्स, डायग्नोसिस, कंडीशंस पेशेंट्स की एक्सेस करते हैं। तो ये हमारी रिस्पॉन्सिबिलिटी हो जाती है एज ए हेल्थ केयर प्रोवाइडर एंड एज ए मेडिकल बिलिंग कंपनी और मेडिकल बिलिंग एग्जीक्यूटिव। हमारी रिस्पॉन्सिबिलिटी होती है कि हम पेशेंट की इन्फॉर्मेशन को किसी भी और व्यक्ति के साथ शेयर ना करें। तो हम भी एज ए, चाहे हम आउटसोर्स काम कर रहे हैं इंडिया में, पाकिस्तान में, यूएई में, यूएस में भी जो मेडिकल बिलिंग कंपनी होती है करती है, वो सभी इस लॉ के अंदर बाउंड होते हैं, ओवर द ओशियन भी बाउंड होते हैं कि वह पीएचआई के अंदर आएंगे और पेशेंट के पीएचआई को रिलीज नहीं करेंगे। The US Department of Health and Human Services (HHS) issued the HIPAA privacy rules to implement the requirements of HIPAA। तो यूएस की जो असेंबली का एक आप इसका पार्ट कह सकते हैं या डिपार्टमेंट कहते हैं, यूएस डिपार्टमेंट ऑफ हेल्थ एंड ह्यूमन सर्विसेज (HHS), यह हिपा की प्राइवेसी और रूल्स निकालता है जिसके अंदर ये बताया जाता है कि ये चीज़ें अलाउ होंगी, ये चीज़ें अलाउ नहीं होंगी, और इनके ऊपर जो भी स्ट्रिक्ट एक्शन लिया जाता है वो एक्शन भी लेती है कमेटी। तो ये इनकी रिस्पॉन्सिबिलिटी है इन चीज़ को इम्प्लीमेंट कराने का, इन रूल्स को। Okay. All the entities like healthcare providers, health plans, clearing houses, and business associates are bound to follow HIPAA rules. That means कि जो भी लोग पेशेंट की इंफॉर्मेशन की, हेल्थ इंफॉर्मेशन से रिलेटेड एसोसिएटेड हैं उसके साथ में, जो कि हेल्थ केयर प्रोवाइडर हो सकते हैं, डॉक्टर्स, मेडिकल बिलिंग कंपनीज, प्रैक्टिसेस, हॉस्पिटल, सभी इसके अंदर आते हैं। हेल्थ प्लान जो इंश्योरेंस कंपनी है जो इन पेशेंट्स को इन्फॉर्मेशन देती है, उनके पास भी इंफॉर्मेशन रहती है पेशेंट की, ये भी इस हिपा लॉ के अंदर बाइंड होते हैं कि यह किसी के भी साथ शेयर नहीं कर सकते हैं इन्फॉर्मेशन। क्लियरिंग हाउसेज जो कि मेडिकल बिलिंग सॉफ्टवेयर और इंश्योरेंस कंपनी के बीच में एज ए मीडिएटर काम करता है। क्लियरिंग हाउसेज की इन्फॉर्मेशन, इनके पास काफ़ी इन्फॉर्मेशन होती है, इनकी रिस्पॉन्सिबिलिटी होती है डेटा शेयर ना हो, कह रहे हैं कि इसका लीक ना हो डेटा। इसके अलावा बिजनेस एसोसिएट्स वो किसी के भी हो सकते हैं, हेल्थ इंश्योरेंस कंपनीज के बिजनेस एसोसिएट्स होते हैं, मेडिकल बिलिंग के बिलर्स और मेडिकल बिलिंग कंपनीज हो सकती है, आरसीएम की, रेवेन्यू साइकिल सर्विसेज की। तो ये कंपनियां भी इसके अंदर बाइंड होती है कि वो हिपा रूल्स को फॉलो करेगी, चाहे वो यूएस में हो या इंडिया में हो या किसी भी अदर कंट्री में हो। ये सभी कंपनीज, ये सभी लोग बाइंड होते हैं हिपा रूल्स को फॉलो करने के लिए। PHI इंक्लूड्स बट इज नॉट लिमिटेड टू द फॉलोइंग। ओके, तो ये जो PHI होती है, प्रोटेक्टेड हेल्थ इन्फॉर्मेशन होती है पेशेंट की, ये क्या क्या एग्जाम्पल हो सकते हैं, आपको मैं कुछ एग्जाम्पल देकर समझाने की कोशिश करता हूँ। जैसे कि पेशेंट का नेम, आप नेम नहीं बता सकते हैं किसी भी अदर व्यक्ति को, उसके फैमिली मेंबर को भी नहीं बता सकते हैं कि आपके फैमिली में जो पेशेंट है वो उनकी इन्फॉर्मेशन, उनकी हेल्थ कंडीशन क्या है, उनको डिजीजेस क्या है, बिना पेशेंट के कंसेंट के आप नहीं बता सकते हैं। उनके एड्रेसेस आप शेयर नहीं कर सकते हैं कहीं पे भी, क्योंकि यूएस अपने सिटीजन्स के सेंसिटिव डेटा को लेकर बहुत ही सेंसिटिव है, तो वह चाहता है कि उसका कोई भी डेटा शेयर ना हो। पेशेंट की बर्थ डेट शेयर नहीं होनी चाहिए। सोशल सिक्योरिटी नंबर, SSN जो होते हैं यूएस में, उसे वह शेयर नहीं होने चाहिए किसी भी और लोग के साथ, क्योंकि इसका कुछ मिसयूज़ किया जा सकता है। मेडिकल हिस्ट्री आप शेयर नहीं कर सकते हैं, ये तो बहुत ही इंपॉर्टेंट है। और उसकी मेंटल फिजिकल कंडीशन आप किसी के साथ डिस्कस भी नहीं कर सकते, इवन उसके फैमिली मेम्बर्स के साथ भी डिस्कस नहीं कर सकते अगर वो पूछते हैं तो, अनलेस अदरवाइज कि पेशेंट साथ में हैं और वो नहीं जज कर सकता है उसको। तो जैसे कि एजिड पेशेंट्स होते हैं या बच्चे होते हैं, तो उन केस में हम पेरेंट्स के साथ में या उनके गार्जियन के साथ में डिस्कस करते हैं, अदरवाइज पेशेंट के कंसेंट के बिना कभी भी उसका डॉक्यूमेंट्स या कंडीशन डिस्कस नहीं होती है किसी भी अदर व्यक्ति के साथ। ईच एम्प्लॉय ट्रेनी is trained on policies and procedures on HIPAA before getting logins। तो जैसे कि मैंने ऊपर बताया, हेल्थ केयर प्रोवाइडर्स हैं, क्लियरिंग हाउसेस हैं, बिजनेस एसोसिएट्स हैं, मेडिकल बिलिंग कंपनीज हैं, इनमें जो भी लोग ज्वाइन करते हैं इस कंपनीज को, वह एम्प्लॉय हो या ट्रेनी हो या एक तरह के वेंडर्स हों, उन सभी को एक पर्टिकुलर ट्रेनिंग के थ्रू, प्रोसेस के थ्रू गुजरना पड़ता है, जिसमें उनको पॉलिसीज़ जो होती हैं हिपा की, वो पॉलिसीज़ और प्रोसीजर को समझाया जाता है कि ये चीज़ें आपको करनी है, ये नहीं करनी है, इन चीज़ों का ध्यान रखना है, अपने सिस्टम को हमेशा लॉक रखना है, आपने कोई भी पेशेंट इन्फॉर्मेशन को प्रिंट नहीं करना है, ना ही आपने किसी डेटा को आपने एक्सेस करना है किसी पेन ड्राइव या एक्सटर्नल ड्राइव से। ये सब चीज़ें कंप्लाइंसेस डिस्कस की जाती है, समझाई जाती हैं बिफोर द लॉगिन, उनको लॉगिन देने से पहले, क्योंकि अगर लॉगिन देने के बाद अगर बताया जाए तो हो सकता है कि वो मिस्टेक कर सकते हैं। तो यूजुअली जो मेडिकल बिलिंग सॉफ्टवेयर होते हैं या मेडिकल बिलिंग कंपनीज होती है, उनके पास एक प्रोसेस होता है जिसमें वह अपने एम्प्लॉयज़ को पहले हिपा की ट्रेनिंग करवाते हैं, और जब ट्रेनिंग को अगर वो एक पर्टिकुलर मार्क्स से पास कर लेते हैं उसके बाद ही उन्हें लॉगिन इशू होता है, जैसे कि वो ये मिस्टेक ना करें। HIPAA violations could lead to practice penalties एंड इवन प्रिजन्स ऑन सम केसेस। दैट मीन्स कि जो हिपा का वायलेशन है इसको बहुत ही सीरियसली लिया जाता है यूएस हेल्थ केयर में। अगर आपने पहली बार हिपा वायलेशन किया है तो आपको कुछ पेनल्टी लगेगी, लाइक $25,000 $50,000 जो भी होगा, जो वायलेट करेगा, जो मेन पार्टी होगा। लाइक अगर आप किसी डॉक्टर का लिए काम कर रहे हैं और डॉक्टर से इन्फॉर्मेशन लीक हुई है, चाहे वो उसकी आउटसोर्स कंपनी पाकिस्तान, इंडिया या यूएई के किसी भी एरिया से लीक हुई है, लेकिन अगर उन्हें पाया जाता है कि हिपा वायलेशन हुआ है, डॉक्यूमेंट आपने इसका एक्सेस आपने लिया है और ये एक अननेसेसरी एक्सेस था या आपने इसको वायलेट किया है, तो इसमें जो मेन पार्टी है उन्हें पेनल्टीज लग सकती है, काफ़ी हैवी पेनल्टीज लग सकती है। और अगर रेगुलर इंस्टेंस बार बार होते हैं तो इवन इसमें कई सारी कंडीशंस ऐसी है जहाँ पे प्रिजन का भी एक प्रावधान है, मतलब कि उनको जेल भी हो सकती है या उनके प्रैक्टिस को ब्लॉक किया जा सकता है, बैन किया जा सकता है कुछ पर्टिकुलर टाइम के लिए। इसलिए ये बहुत ही सीरियस टॉपिक है। इसको हमें जैसे ही हम ज्वाइन करते हैं हेल्थ केयर तो हमको इसके बारे में अच्छे से जान लेना चाहिए, और प्रैक्टिसेस की भी रिस्पॉन्सिबिलिटी अपने एम्प्लॉय को ट्रेन करें इन चीज़ के ऊपर, जिसकी वो मिस्टेक्स ना कर पाएँ, जानबूझ के ना करें और गलती से भी ना करें, क्योंकि ये बहुत ही इंपॉर्टेंट है पेशेंट की सिक्योरिटीज़ के लिए, उसके डेटा के लिए। तो ये बहुत ही इंपॉर्टेंट है हमारा हिपा, जिसके बारे में मैंने आपको आज समझाया है। और इसके बारे में डिटेल में अगर आपने जानना है, क्योंकि ये मैंने केवल आपको ओवरव्यू दिया है, डिटेल में अगर आपको जानना है तो मैं एक डिस्क्रिप्शन में एक लिंक दे दूंगा, एटलीस्ट 2-3 लिंक दे दूंगा, जिससे कि आप डिफरेंट सोर्सेज से आप जान सकते हैं कि हिपा लॉ क्या होता है डिटेल में और इसके अंदर क्या क्या चीज़ें आती हैं। तो दोस्तों आज के लिए इतना होगा। मैं आपके लिए और नए चैप्टर बनाने की कोशिश करता हूँ आगे आने वाले टाइम में। आपसे रिक्वेस्ट है, अगर आपको अच्छे लग रहे हैं, नॉलेज मिल रही है वीडियोस से, तो आप प्लीज़ शेयर कीजिए मेरे वीडियोस को अपने फ्रेंड्स के साथ में, अपने कंपनीज के ग्रुप में, अपने दोस्तों के साथ में, और सब्सक्राइब कर लीजिए इस चैनल को, जिससे कि और लोगों को इसका बेनिफिट मिल सके। और बहुत जल्दी हम एक नई वीडियो में मिलेंगे। थैंक यू दोस्तों, बाय बाय।
What is ISO 27001? As the risks associated with cyber attacks and data breaches continue to increase, information security has become a critical issue for every business. An effective approach should help defend against both external attacks and common internal threats, such as accidental breaches and human error. ISO 27001 is the international standard that provides the specification for an Information Security Management System, or ISMS. This is a systematic approach consisting of people, processes and technology that helps you protect and manage all your organization's information through risk management. An ISMS, particularly one that conforms to ISO 27001, can help organizations comply with a host of laws, including the high-profile General Data Protection Regulation, commonly referred to as the GDPR, and the Network and Information Systems Regulations, also known as the NIS regulations. ISO 27001 focuses on protecting three key aspects of information: confidentiality, integrity, and availability. Confidentiality means that the information is not available or disclosed to unauthorized people, entities, or processes. Integrity means that the information is complete and accurate and protected from corruption. Availability means that the information is accessible and usable as and when authorized users require it. ISO 27001 is one of the most popular information security standards in the world, with the number of certifications growing by more than 450% in the past 10 years. The standard has been designed to help organizations manage their security practices consistently and cost-effectively. It's technology and vendor neutral and is applicable to all organizations, irrespective of their size, type, or nature. ISO 27001 is the mainstay of the ISO 27000 series, a family of mutually supporting information security standards that together provide a globally recognized framework for best practice information security management. These standards help organizations keep their information assets secure by offering a set of specifications, codes of conduct, and best practice guidelines to ensure strong information security management. Note that ISO 27001 only provides the specification of an effective ISMS. ISO 27002, another standard in the ISO 27000 series, provides the code of conduct, the guidance and best practices that can be used to implement your ISMS. What are the benefits of ISO 27001? ISO 27001 will help you Secure your information in all its forms. An ISMS helps protect all forms of information, whether digital, paper-based, or stored in the cloud. Increase your attack resilience. Implementing and maintaining an ISMS will significantly increase your organization's resilience to cyber attacks. Protect what matters. Whether the scope of your ISMS covers your whole organization or just the parts that deal with information, ISO 27001 protects against technology-based risks and other more common threats, such as poorly informed staff or ineffective procedures. Respond to the evolving security threat landscape. An ISMS constantly adapts to changes both in the threat environment and inside the organization, ensuring that information security risks are effectively managed over time. Reduce costs associated with information security. An ISMS looks to assess and treat risks cost-effectively, ensuring organizations can maximize their return on investment. Protect the confidentiality, availability, and integrity of your data. An ISMS offers a set of policies, procedures, and technical and physical controls to protect the confidentiality, availability, and integrity of your information. Make security part of business as usual. The standard's holistic approach covers the whole organization, not just the IT department, so employees can readily understand risks and embrace security controls as part of their everyday working practices. ISO 27001 controls. There are 114 controls in Annex A, covering the breadth of information security management, including areas such as physical access control, firewall policies, security staff awareness programs, procedures for monitoring threats, incident management processes, and encryption. The standard requires organizations to compare the measures they have implemented with the Annex A controls. They're then expected to implement the missing controls or else provide and document a reason that those controls aren't applicable to them. How to get ISO 27001 certified. Once an organization has met the various requirements stipulated by ISO 27001, the next step is to seek certification. Certification is the procedure by which an external certification body provides written assurance that an organization's ISMS conforms to the requirements of ISO 27001. Because certification to ISO 27001 is not mandatory, not all organizations choose to achieve it. However, there are many benefits to certification. As well as helping you protect your information and comply with relevant legislation, ISO 27001 certification holds a distinct market value by providing clear, externally validated proof of your organization's willingness to meet internationally accepted information security standards. The process involves going through a certification audit, in which an expert from a certification body will visit your organization to examine your ISMS. If they're satisfied with what they see, they will award a certificate. For more information about ISO 27001, visit our website.
Hi, this is Daryl Tano of Solutions Reservoir, and welcome to Cybersecurity and the U.S. Government, Part 2 of our 3-part cybersecurity tutorial. These videos align with more comprehensive and timely material on the Solutions Reservoir website. As before, pause on slides with yellow backgrounds to review reference material. In Part 1, we looked at the basics of cybersecurity attack and defense. Now we'll look at the participation of the U.S. government in the field. We'll look at FISMA, noting its establishment of security objectives, and mention some of the key organizations involved, such as US CERT and NIST. Then we'll introduce some key standards and examine 3 of them, particularly SP 853. We'll close with introductions to FedRAMP and Trusted Internet Connections. Part 3 will focus on the Department of Defense. FISMA was part of the E-Government Act of 2002, which called for agencies to cost-effectively secure information types and systems to an acceptable level of risk. The Act assigned areas of responsibility and chartered NIST to develop foundational guidelines. FISMA also defined 3 security objectives: confidentiality, integrity, and availability, C, I, and A. We'll see a lot of C, I, and A so we've added a reference slide on them. DHS is chartered with protecting the national infrastructure from physical and cyber threats. Its U.S. CERT arm plays a major role in the cybersecurity mission. U.S. CERT operates several threat-related databases. It also operates the NCPS, operationally known as Einstein, which is a government-wide IDPS. I think you'll find the U.S. website interesting and possibly a little unsettling. NIST, of course, is recognized for its fundamental role in cybersecurity standards development. Here's an org chart of DHS. Coming up are some important standards. In them, FIPS is Federal Information Processing Standards, and SP means NIST Special Publication. We'll put a yellow background on the moment. Risk Management Framework, or RMF, refers to the process of qualifying, securing, and maintaining an information system. We'll see in Part 3 the term RMF is now also used for national security systems, which include DoD systems. Here are the standards for your review, and then we'll come back to the RMF. Begin the RMF process by looking at your community's needs and categorizing the potential impact of your IT system. Certain publications provide guidance for each step. Select the appropriate security controls as step 2. Controls are operational or systematic measures taken to protect an information system. Recall from Part 1 the example of a requirement to change your password as a security control. We'll address controls when we talk about SP 850. The RMF calls out 6 major steps, with step 6 being the ongoing state of continuous monitoring per SP 800-137. FIPS 199 provides guidance to categorize information types and information systems according to potential impact levels. It calls out 3 levels of impact, low, moderate, or high, as a result of a security breach, i.e., the loss of confidentiality, integrity, or availability. Impacts are low, moderate, or high if the loss of CI or A would have limited, serious, or severe consequences on operations, assets, or individuals. Security categories are applicable to both information types and information systems. And there's a format to express this, which will become more clear using an example. Values of these impacts will be low, moderate, or high, or possibly not applicable. Here's what we just had about information types and systems. For an information system, the value of C, I, or A can be low, moderate, or high. But for information types, confidentiality can also have a value of not applicable. Categorizing the security of a system is a 2-step process that uses the concept of a high water mark in both steps. Here are categorizations of 2 information types within a given information system. Categorizing the system starts with categorizing impact values for C, I, and A using high water marks for each, giving us the moderate, low, and high values shown here. In essence, we went down through the information types. Now we note the high water mark across the system CI and A values. In this example, this is a high impact information system because the most significant CI or A impact value for this system, its high water mark, is high. Note that the high water mark yields a single value for system categorization. That value was high in this example. Technically, this single value notion is called out a little more in FIPS 200 than FIPS 199, but on this the 2 standards are tightly coupled. In Part 3, we'll see that national security systems do not follow the single high water mark concept for the system. FIPS 200 addresses selecting the security controls needed to satisfy the minimum security requirements. The main part of the FIPS 200 standard is only about 4 pages long. I view it as something of a bridge between FIPS 199 and SP 853. Of note is that FIPS 200 defines 17 security control families that are used in SP 853 and that you'll see all the time, particularly their acronyms. The following reference slide discusses FIPS 200's descriptors of the first 3 of these families. NIST Special Publication 853 is the fundamental reference for security controls across the government. It's the basis for FedRAMP, and now even the basis for controls for national security systems, which includes DoD. As we'll see, SP 853 provides a comprehensive set of security controls applicable to FIPS 199 designated low, moderate, or high impact systems. But it's inflexible and offers guidance for tailoring matters to specific needs. Controls are grouped within FIPS 200's 17 families, plus an 18th one, program management. Here are the 17 families again, plus the 1 for program management. 853 is a well-written document of some 450 pages. Appendices account for about 90% of it, of which D, the summary, and F, the catalog, comprise about 2/3. Appendix D has 19 tables. Table D1 defines prioritization codes. Table D2, a segment of which is shown here, summarizes 17 control families, and tables D3 through D19 provide further control details per family. Table D2, the summary table, is divided by control family in order, starting with access control. Here you see the control names and numbers of the first 15 controls within the access control family and our control baselines. Note the low, moderate, and high impact categorizations per FIPS 199 and the priority for each control. Let's look at how to use this table, looking at AC1 and AC2. For AC1, we see that regardless of whether our system were categorized as low, moderate, or high potential impact, we'd implement the same basic AC1 control, which is defined in Appendix F. Let's contrast that with AC2. If our system were low impact, we'd only implement the basic AC2 control. But if it were moderate or high, we'd implement a number of additional subcontrols, which are also defined in Appendix F. And that's how it goes each control family. In the next slide, we'll look at Table D3, which is the in-depth or expansion table for the access control family. This is a portion of Table D3 for the access control family. Here we see the expansion of AC2, including the name of each subcontrol. We just saw them called out in the last slide, and here you see the greater detail on the subcontrols to be implemented for moderate and high potential impact systems. You may want to spend a little time with the upcoming 3 reference slides, which show how the descriptions of AC1 and AC2 are presented in Appendix F. The selection of the requisite security controls completes step 2 of the RMF. We won't go into steps 3 through 6. Just note how you then implement and assess the controls, have the system authorized, and then go into the operational period and continuous monitoring. FedRAMP provides a standardized approach to securing cloud products and services for a government customer. While it uses 853 as the basis for controls for low and moderate impact systems, it calls out a number of additional controls. At some point, FedRAMP may offer a high impact system. There's more about this on the Solutions Reservoir website. A feature of FedRAMP certification is the controls assessment, RMF Step 4, by an approved third party called a 3PAO. Step 5, authorization, is provided by the FedRAMP JAB, although many suppliers have received a more narrow authorization directly from an agency. FedRAMP calls for a continuous monitoring program, which you may recall is RMF Step 6. Some years ago, reacting to the manner in which government agencies were procuring internet access, the OMB developed the TIC initiative, which included an expanded role for US CERT. DHS developed a reference architecture for trusted internet access, envisioning 3 ways to obtain it. A large agency could develop and operate its own TIC, which involves a SOC and all the cybersecurity controls discussed in Part 1 and here in Part 2. A small agency could procure access through a larger agency's TIC, or any agency could procure a managed security service, usually called MTIPS, from a small set of GSA authorized providers. From the DHS reference architecture document, we observe the 3 means to obtain a TIC: the single and multi-service TICAPs, and the service-based options MTIPs. Note the explicit call-out of Einstein, the NCPS, National Cybersecurity Protection Systems, which provides IDPS for federal departments and agencies. Here's a yellow background if you want to study this diagram. Recapping, we've looked at FISMA, under which security objectives for information and information systems were defined. We've noted some key organizations, notably DHS, US CERT, and NIST. After introducing some of NIST's cybersecurity standards, we covered FIPS 199, 200, and especially NIST SP 853 in some detail. We concluded with introductions to FedRAMP and trusted internet connections. In Part 3, we'll look at cybersecurity and national security systems, of which DoD systems are a part. There's more information on the Solutions Reservoir website. So, see you in Part 3.
What is the PCI DSS? The Payment Card Industry Data Security Standard, or PCI DSS, was developed to encourage and enhance cardholder data security and to facilitate the broad adoption of consistent data security measures globally. It applies to all merchants and service providers that process, transmit, or store cardholder data. If your organization handles card payments, it must comply, or risk suffering financial penalties or even the withdrawal of the facility to accept card payments. The PCI DSS was launched in 2004 and is the result of collaboration between the major credit card brands American Express, Discover, JCB, MasterCard, and Visa. Do I need to comply with the PCI DSS? All organizations that accept credit and debit cards or that store, process, and/or transmit cardholder data need to comply with the standard. Merchants and service providers' compliance requirements differ depending on a number of factors, including the size of the organization and the volume of transactions it undertakes. The criteria that a merchant or service provider have to meet are set by the individual payment brands, each of which has its own compliance program. What are the penalties for non-compliance? The PCI DSS is a standard, not a law. It's enforced through contracts between merchants, acquiring banks, and payment brands. Each payment brand can fine acquiring banks for PCI DSS compliance violations, and acquiring banks can withdraw the ability to accept card payments from non-compliant merchants. It's also worth remembering that a PCI DSS breach is always a GDPR breach, as cardholder data is classified as personal data under the regulation. So, as well as any enforcement action from your acquiring bank, your organization could face administrative fines of up to 20 million euros, currently nearly 18 million pounds, or 4% of annual global turnover, whichever is greater, under the GDPR. How to become PCI DSS compliant. The PCI DSS specifies 12 requirements that are organized into 6 control objectives. 1. Build and maintain a secure network. Install and maintain a firewall configuration to protect cardholder data. Do not use vendor-supplied defaults for system passwords and other security parameters. 2. Protect cardholder data. Protect stored cardholder data. Encrypt transmission of cardholder data across open public networks. 3. Maintain a vulnerability management program. Use and regularly update antivirus software or programs. Develop and maintain secure systems and applications. 4. Implement strong access control measures. Restrict access to cardholder data by business need to know. Assign a unique ID to each person with computer access. Restrict physical access to cardholder data. 5. Regularly monitor and test networks. Track and monitor all access to network resources and cardholder data. Regularly test security systems and processes. 6. Maintain an information security policy. Maintain a policy that addresses information security for employees and contractors. Compliance with the standard is notoriously complicated, and many organizations fail to maintain their compliance. Verizon's 2018 Payment Security Report found that nearly half, 47.5%, of organizations it assessed for interim PCI DSS compliance had failed to maintain all security controls. First, it's necessary to determine your merchant level and whether you need to submit a self-assessment questionnaire, SAQ, and if so, which one, or a report on compliance, ROC. There are several types of SAQ, each of which has different requirements. Some require internal and external vulnerability scans and regular penetration testing. An ROC, on the other hand, must be conducted by a PCI Qualified Security Assessor, QSA, who will issue a formal report to the PCI Security Standards Council to attest that your organization is in full compliance with the standard. Whatever your requirements, a PCI DSS gap analysis is a useful first step to determine your organization's current compliance levels and outline the specific steps needed to achieve full compliance with the standard. It includes a detailed review of compliance activities such as on-site interviews with key staff, an assessment of the in-scope system components and configurations, and a physical and logical data flow analysis, in addition to examining out-of-scope components.